All right. So today I'm trading Bitcoin and I'm going to share with you guys some tips I've used to trade Bitcoin and what I'm doing right now. So here's basically what I do. So right now, here's the first number one tip. If you're on TradingView, whatever you use to trade Bitcoin, only if you trade any other crypto other than Bitcoin or anything other than Bitcoin, like I trade gold also, only have two assets on your watch list at one time. So if you look right here where my face is at, follow my face and look at where my eyes are pointing to right there if you're looking on the screen. Well, if you're watching this in real, then it's different. But basically, the gold and the Bitcoin right there on my watch list, I only have two setups maximum on the watch list, so I can laser focus my attention on the right correct setups. Because if I can't do that, then I'm going to have what's called analysis paralysis, and I'll be looking at all these different cryptos and trying to take 10 setups. And what that's actually going to do is that's going to mess with the risk management of your account. Because if you're taking six trades, then that's obviously, unless you're good and you know what you're doing and you know what you're doing, and that is a part of your risk management strategy, then you can do so. But if you're trading Bitcoin and other cryptos, trade 1 to 2 setups at a time so you don't blow your accounts. And this is going to help you actually scale your accounts and become a profitable trader. So the first thing I'm going to let you guys know is I had this liquidity zone for Bitcoin, and it actually just broke this morning like I predicted. Um, so here's what basically I did. I'm not going to make it complicated. Everyone's going to understand. I don't do indicators, EMAs, anything. There's nothing wrong with those. Those work actually. If you're a trader that does that, it does work. But what also works is trading the charts naked, because the most info about the market can be shown on the actual chart. And when I have all this other bullshit on my screen, how am I supposed to see the actual data? The candlesticks represent data. If you're smart enough, each candlestick isn't random. Everything has a shape, a size, a pattern, not a pattern, a shape, a size, a meaning, a symbol for some reason. The person that made the markets up didn't make these candles randomly. All the candles have meanings. So when you're putting other shit on your chart, it's just kind of distracting you. Unless the strategy works and you're making money, who cares? But if you actually want to genuinely learn the market, learn how to read it, using raw price action is superior. So number one, we had liquidity broken right here. I use smaller time frames for my trend on Bitcoin because different markets actually have different markets have different price action, and that determines how you actually on the actual chart how you mark up the chart physically. So if you're a technical analysis person and you do trend lines or your market structure, the different crypto coin is going to affect that, because different cryptos and tokens and whatever moves differently. So right now on Bitcoin, we had liquidity break for Bitcoin right here at that black line. Where did it break on that black line exactly? It broke right here. Here is where it's at. So this is the line, right? We had a bunch of retail traders trying to support and resistance the fuck out of this and trade the resistance and sell that. But then after we have this resistance, you're like, oh, sellers. And then we had all this demand. We had all this demand come up right here. And that demand basically caused the market to go crazy because people thought it was going to go down. And what the demand actually did, what it did was it disrupted the previous trend. The previous trend was bearish because why? Look at the blue arrow that's on my screen, right? This previous trend was bearish. Look where the blue arrow is pointing to. All this price action was bearish until now, which is this morning. This morning we had a disruption of the trend and that added demand. Price came back down after adding demand, filled in that gap, then came back up, added to some more demand, and it took out this high, right? And the second I saw this high that the blue arrow was pointed to, the second I saw this high being broken, I immediately knew that, okay, there's still demand in the market. I have time to enter another trade. And where's my setup exactly? Well, on Bitcoin, the market doesn't always retrace to every single fair value gap, because that's what I trade on Bitcoin. I trade fair value gaps and order blocks. I haven't entered the trade yet. There's a fair value gap right here, and then there's an order block being formed / demand zone being formed right now. An order block is basically two large engulfing candles, like right here where you're seeing right now. These engulf, or the blue one engulfing that silver one. It's when you see a cluster of those two candles that looks like a block, and then there are two large candles or medium-sized candles that inject money into the market. So it's caused by the institutions. So the institutions, hedge funds, individual people that have large amounts of Bitcoin, when they're buying and selling in the market, or they're selling Bitcoin, it's going to show in the market. So if someone right now is buying Bitcoin, it's either a cluster of retailers at home buying it, which is unlikely because it's Monday and at 10:49, you think a lot of retail traders, they're at work. So this is caused by an institution, a person, or institution, hedge fund, or a person, right? So a person is, or a hedge fund or institution is buying Bitcoin right now. Someone with a lot of money is buying Bitcoin. And I can tell all this just by reading the candlesticks. This is why I like learning price action. This stuff has been around for like 20 years, all right? Versus all the new shit. This is an order block. Order blocks have been around for years and years and years. You can go YouTube research what an order block is if you don't believe me. This is a fair value gap. This gap. Sometimes when the market expands and there's a lot of demand or supply in the market, it doesn't have time to retrace itself. So it leaves behind these gaps, and the gaps represent inefficient price action. Efficient price action can be looked at as a healthy market. A healthy market moves up, down, up, down, up. An unhealthy market, because there's so much volume, doesn't do that. What happens, instead of moving up and down, it may just move straight up, right? And that's a big ass demand movement. And because of that, there will be all of these gaps left behind that it left. And you have the potential to trade those gaps. Why are we trading the gaps? The reason is because of the fact that there are retracements in the market itself. So when the market expands, it comes back and it retraces itself either at the gap, lower gap, whatever. It comes back, it retraces itself before going up again. So if you're buying an asset, or you're buying something and something's all green, don't buy it at the top. Don't buy it. Don't have FOMO, fear of missing out. Don't have fear of missing out and buy it at the top. Wait for the prices to get cheaper to retrace the expansion that it made that caused the initial and original excitement in the first place. Wait for price to come back down and get cheaper, then buy again. And that's how you do it. That's how any strategy works. And it's just basic supply and demand. I'm literally showing you how the markets work. So you can sit there in the comments and say, well, my SMA line tells me otherwise. You can say all this bullshit in the market, but the markets work like this. This is how markets move. Market moves by capital. Market structure is a thing. Highs, lows. It's all a part of how the market moves. But yeah, guys, I hope this helped you. If you had the brain to understand what I'm talking about, good. If you didn't, that's fine. Watch more of my videos or research every single thing I'm saying and get back to me. Yeah, so I hope you guys like this video. Like I said before, I'm planning on buying Bitcoin because there's clear demand. And yeah, so when there's demand in Bitcoin, I get in the market. When there's no demand, I don't get in the market. How do I know when there's demand? Well, when there's demand in any market, the market goes from consolidation to expansion. An unpopular market that doesn't do shit stays like this, maybe it goes up a little bit, maybe it goes up, it goes down, it just consolidates. But a market that has volume goes up, down, up, down, up. And a market that has high volume just goes straight up, maybe, straight up or straight down, and then you have to get in on retracement. So yeah, guys, I know it seems complicated, but it's not. It's really not. Text me on Instagram. My Instagram is in the description. Yeah, if you have any questions, I'll let you know or help you. But yeah, I hope this video helped you guys. Bye.